All right, hey guys. Okay, so this is the video that I'm gonna try to get in as much detail as I can. There's a lot of I wouldn't say a lot, but there's other nuances in my trading that I really can't explain right now or put into words. So I'm just gonna give you guys the basic concept. Okay, so now you guys know my trading starts with the bias, right? It starts with the bias, and then it goes from there. So let's just take today for example. I had a short bias. Okay, so once I have a short bias and the market opens, okay, so this is what I want to do, and and this is the reason why I use charts. Because I like to visually see stuff. So I like to visually see things, and I'll explain to you how I enter and what I enter for and stuff like that. But I like to visually see things. So I like to visually see a pullback, and that's when I will pay attention. So there's no amount of ticks. There's no amount of I just like to visually see a pullback. So I visually seen this pullback, right? You visually see that pullback. So what happened is once I visually see a pullback, and my main entry tool is the dome, guys. I look at the dome, and what I want to look at with the dome is I want to see absorption volume. I want to see absorption. I want to see, like in this case, I want to see sellers come in and they're absorbing the buyers and capping the market and stopping it. That's what I want to see, because that means okay, they're starting to get sellers are starting to get aggressive, and I look at the dome, so that's what triggers me to get in. Now, to learn how to trade off the dome, it's not gonna it's kind of a thing that's gonna take time for your eyes and knowing what to look for. It's not something you can learn in a month, a week, a day. You're gonna have to take a little bit of time to learn the dome, okay? But I'll give you a little some tips and tricks where that's like a kind of an alternative of the dome that you can kind of use in your trading tomorrow, actually. But for this video, that's what my main entry tool is the dome. So I'm looking at the dome. I start to see absorption, right? So in this area, I really didn't see any absorption that made me say want to get in. But in here, I got in. I remember I get an entry here, and the thing is, the way I trade, guys, and this is what I think gives me an edge is, you know how you hear people talk about slippage and all this. I don't really worry about slippage because of the simple fact that I'm not trading. I'm not trading that game. I'm not trading a scalping game where I got to scalp ticks and I need every little. I'm not trading that game. Give you an example. If I'm trying to get in at 41s right here and I end up getting in at 41.50, so what? It's not really a big deal because that's not, you know, I'm scaling into my position for one, and I'm not playing that game where I have to have exact prices. So, but again, I got in here. Okay, market went up a little bit here. I got in here because of the dome. I started seeing absorption, and remember I told you I would, when the market's moving against me, I would do a three. I was scaling 3 times, because after that, then the market should turn, or it shouldn't turn, or you should, at that point you shouldn't keep scaling in. That's kind of not a smart thing to do, to keep scaling all the way in as it keep going in your favor. You don't want to keep adding like that, but you're just giving yourself some space to be wrong for the first 2 or 3 entries. That's all you're doing. So I saw absorption here on a dome. I got in here. I saw absorption here. Now this is where it gets like where it becomes more of an art now. See, I'm looking for absorption, and once I see absorption, right, boom, and then now I'm 3 times. So now I know, okay, I'm not, if it keeps going in my favor, I'm just gonna bail on this thing. I'm not gonna keep going into it. So then now when the market started to turn, like here, I started to add aggressively, and I'm looking at the dome to watch it, and I'm looking at the chart to see visual confirmation. Then I started to add, and then if the market doesn't go pretty fast and it started to pull back, remember I'm 1, 2, 3, and I'm 4, 5, 6. I'm adding. Once it flips, I'm adding 4, 5, 6, sometimes 7 times. So I can't. If you think about it, it wouldn't be smart money management for me to let this thing go all the way up here and stop out when I have seven. I have about 7 ads in these areas here, and I'm losing. So it's better just to scratch that trade and start from scratch. What's the big deal? The market's not going anywhere. You wasn't right away. So what? So I'll scratch here, right? And that's what I did. So once I get this third ad, I'll start to add very aggressively once it started to confirm to go in my favor. But if it turns around and go here, I'll scratch some of it just because I'm trying to manage my risk. I'm trying to manage my money, right? So in these areas here, I'll scratch, and that's okay. It happened. So it was a small loss, and the same thing happened here. You got absorption, add, scratch, and then here's where it gets fun when I add it. When I got into these areas, and then now, and what I want to talk about is once it starts to confirm. Let's talk about when it starts to confirm, and this is where it's very important. So I'm looking for absorption. It turns. I start to add, and when I start to add, when it turns in my favor, there's no method to that. There's more feel, and there's more like, okay, the market's starting to turn. It's starting to show some confirmation to go in my favor. I start to add. So once the market started to go here and it started to add, and it like this, these are the levels where I started to add, where I originally started to get long at, right? So once it clears those levels, then I can. This is what I do too. This is what helps me a lot. I take myself completely out of the trade, and what I mean by that, I start to trail my position down now, right? And this is where money management, because you don't want to take yourself out of a good trade. So I know me, I don't like for trades to start to really go in my favor and then come back and stop me out. That's why I don't have targets, because it wouldn't work for me. Say my target's here and the market gets here and then it comes and stops me. That mentally it doesn't work for me. It could work for some people, but it doesn't work for me. So what I do is once it starts to confirm like this did in my favor, I say, okay, now I pretty much take my hands off the wheel and I let it go on autopilot now. And what I mean is I would trail my position down. So I would do about 7 ticks from the bar. So 1, 2, 3. So and if it keeps dropping like it did, 7 ticks, right? So here, 1, 2, 3. I would scale it down 7 ticks, 7 ticks, seven. If it doesn't pull back 7 ticks, I just let this thing ride. And look, right here, it's where it pull back about 7 ticks in these areas, and I stop myself out, right? See, I took myself out of the trade and I let the market tell me what to do. I didn't do it after I did my job of scaling in and entering and doing all that and becoming and not mastering, but performing the art of trading. Once I'm right, I take myself out of the trade, because we're all humans. Once we see that green sign start going, and we get a little fearful, I don't want to lose, and we take ourselves out of a trade. Otherwise, that can be really big. So once it started to go in my favor, like here, guys, I just set a trailing stop. That simple. And once it started to go here, trailing stop, right? Boom, boom, and I trailed it down. And I keep doing the same thing over and over. So I have about 2 minutes. So what I'm gonna do is I'm gonna tell you guys a simple way. If you don't, because the dome takes a while. And you can use this tomorrow on your trading. I want you to look at certain aspects of trading. Not all the time, but most of the time, turns in the market happen where you see high volume. That's a lot of activity going here. Imagine this: high volume. Look at this: high volume, right? Turns in the market happen where high volume's at. So start looking at that, and we're not talking about little volume. We're talking about things that poke out at you. Look, that pokes out at you, right? That's a turn in the market, right? And I'm not trying to say it's always 100% correct, but I'm saying those core they match up with, sometime when I'm looking at the dome, those high volume bars match up with the dome, with the absorption. You can look at this, and like markets moving up, high volume, it kind of turns sometime. Just and it's not nothing's 100%, but I'm just saying, look at it. Look at these areas here, right? Markets going up, high volume here, right? And when I mean high volume relative to the volume around it, not high volume. So look, high volume, market turned. You understand what I mean? Like high volume here, market turn. Those are little areas you can look at. So start looking at the high volume exhaustion, and that's where the market can turn. Especially if you're say I'm looking at an uptrend, market pulls up, high volume, market turns and goes down. Just little tricks. It just coincides with me looking at the dome. But guys, I hope this helps. You have any questions, just let me know.